Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, well, I'm back after my Christmas break and I've had a wonderful time, and I want to start by wishing all of you a very happy new year. I hope you too have had a wonderful time over the Christmas period. Right, we're going to be getting back to the usual routine from Monday, covering the stock market, covering some precious metals, covering some cryptos, oil, maybe some bonds and other things like that as well. But I just thought I'd do a quick catch-up video for Bitcoin, since it's been a few days since we've done anything. And I might also find time to get a quick update out on some altcoins as well tomorrow. So without further ado, let's get underway. But before we begin... But first, a quick message about the many benefits of becoming a member of the Green Star Trading Patreon. If you already appreciate the work I'm doing on YouTube and want to show your support, then you can join Tier 1 for just £5 per month. You will still bag yourself an exclusive video each week that won't be available on YouTube. If you join Tier 2 for £10 a month, you get the same weekly exclusive video, but you also get access to the public Discord, where there is a multitude of channels where you can discuss anything you want with all of the other member patrons on the Discord, including myself. You also get access to all the educational videos I've ever produced, the entire back catalogue, including the Elliott Wave series, plus multiple videos covering everything from technical analysis, indicators, to risk management and trading. You also get access to a weekly live analysis session, which will be going out on the YouTube, and therefore if you're not available during the live session, you can always come back and watch it later. Finally, there's Tier 3 for £15 a month. You get access to everything you get in Tier 2, but you also get access to my bespoke stock rating system, where I give an at a glance out of 30 rating for each of my stock picks for the month. You also get access to my monthly dividend calendar listing all of the ex-dividend dates and payment dates for those said stocks. If you yourself have a stock that you would like me to rate, you can put this in the Discord in the relevant section and I will get back to you with a rating. If you want me to look up a specific ex-dividend date or payment date, I'll provide that service as well. Alright guys, thank you for listening, and now time to get back to the video. Okay guys, welcome back. Now it's always nice when you go away for a little while and you leave the charts to themselves in the hope that whatever you're looking at will resolve itself while you're away and come back to a nice surprise with a nice clear direction of what's going on. Well, in this case, we come back and absolutely nothing has changed. So at least this is going to make this video pretty short. We're still in a bearish downward trend. We still think we're in a wave C down of a 3-wave ABC flat pattern, and we think we are going to finish lower. Now this opinion can change, and this opinion can change quickly. If we break to the upside in an impulsive fashion, we can reconsider what we're looking at. But for the moment, the same pattern we've been looking at for many months, which was originally an alternate but became our primary after we over a month ago, when we saw the violence of this breakdown here, we decided to make this our primary count and the bullish count the alternate, and since that point we have stuck with the bearish case. Now I know that some of my patrons who are always discussing in the crypto chat the various counts for Bitcoin, I've gone back and forth with many of them. We've had issues resolving the top here, and there's agreement and disagreement over how to do it, which is absolutely fine. And there's also agreement and disagreement about how to resolve this downward move. Now, the way I've had to do it here, I'm not happy with, but it's the best I can make of it. So, in case you're new to the channel and you don't know what I'm talking about, let's just have a very quick recap. Essentially what I'm saying is that this is a 3-wave flat pattern that we're in, with the wave 3 top back here, and it will resolve into a wave 4 down here with an A wave and a B wave, and we are now in the ultimate wave, the C wave. Once it's complete, we will resume the upward trend and head on to our upper targets. And that is essentially what I think is going on currently. The way I've had to count this in the meantime, and I've gone back and forth on this, but I'm just settling with this for simplicity at the moment, is that this was a 5-wave move down into a wave 1. This is a wave 2. This is a wave 3. very violent, very quick. This is a disproportionately long wave 4 in comparison to this wave 2, and that we are now coming down in the wave 5. That's the easiest way I can resolve this as a 5 wave move, and I think it is most likely going to be a 5 wave move. It's just not particularly pretty. Okay, so let's just put back up the bearish count for a minute. Alright, so yeah, we're looking at A, B, C. We're going to work our way down into this target box. That's what I think is happening. So having settled on this interpretation for the moment of 1, 2, 3, 4, 5 to come. Now, as I've already expressed, I'm not particularly happy with how it looks, but we're just going to have to go with it. So let's introduce this here. This is our bearish impulse invalidation. So saying that this is going to be a 5 wave structure and that this is the 1 and this is the 2 and we've done a 3, and don't worry about the projection of the 5th and the length of the 3. This 3 is longer than the 1, so it is a valid impulse and there is currently no overlap. So if we're saying this is 3 and this is 4, we didn't get an overlap, so it is legitimate, and then this will now break down into 5 more waves into a 5th. The 5th could be longer than the 3, and it won't matter because 3 won't be the shortest. Now, it won't look pretty, admittedly, but if we come back above this level, then this is the invalidation point for that interpretation of this being a 1, 2, 3, 4, of this being an impulse. At that point, we have to look at it one of two other ways. We have to either look at this as a 1. This is going to be a 3 wave move back into a 2, and we're going to have a much bigger 3, 4 and 5 down much lower, like that. Okay, and that's going to be our C leg, or the bullish interpretation of an ABC. So the ABC would essentially be that, to just quickly remind everybody, this would be 3, this would be 4 instead of this whole structure. This would be 1, and this would be A, this would be B, and this would be C, into a 2, not going back beyond this low here, obviously, in order to get a legal 2, and then we'd be off in the 3 of a 5. That is essentially the options as I see it. So we're just going to grab these little things here, we're going to put these into the bearish case, and that's how the count looks currently. So until this downward trend breaks, until we see volume come in, until we see an impulsive move higher supported by momentum, then really at the end of the day we should just assume we're going to continue to head lower, and continue to follow this bearish case. The target box down here is just a target of the 123.6 through to the 1618 of the wave A projected from the B. Pretty big area, I know, 14 grand, but that's the best we can do for the meantime. So let's discuss an alternate view for the moment, which is a bullish count which is just hanging on by the skin of its teeth currently, and that's the idea that we've done a 1 and we've already completed in a 2. Okay, so this would have been 1, 2, 3, 4, 5, an A in this interpretation, B, and then this is a fast 5 wave move into a C. Now, in order for this to be correct, we have to be able to interpret this as some kind of 1, 2, 1, 2, or 1, 2, and this is a flat. And now we're going to race up out of here in a 3. That's what we'd have to see now. We'd have to see it absolutely come flying out of here for this to have any chance. Now, we did come back to structural support. As you can see, previous highs, previous resistance becoming support, previous resistance here becoming support. Okay, and here, so we come back into all this market structure, we wicked straight down to it and we bounced. We came to the 61.8 and 65% golden ratio or golden zone here. Yes, we did wick through it a little bit, but normally off of this kind of setup, if it's correct, then we would expect to have an 80% give or take around about an 80% probability of making the median line. So 1, 2, 3, 4, 5, something like that. Now in this instance, this is a smaller wave 1, okay, and a smaller wave 2. So what we'd be saying is actually this would be 5 waves up into a 1, then down into a 2 of the fifth and final wave up. Okay, sorry, of the third of the fifth final wave up, if that makes any sense. So we'd be saying 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. Okay, carrying on up here. And that would be a very bullish interpretation, taking us to probably somewhere around 130, 140k, if this was correct, before we put in the longer term wave 5 top and have a much more significant correction than even this one that we've been tracking. So this has got to pull itself together quick, sharpish, if it's going to prove itself to have any legs at all. I have not much confidence in this being correct at all at the moment, but I'm open to accepting it. If we do get a very bullish and impulsive move higher towards the median line here, then I would be more open to considering this being a 1 and a 2. But I think it's a bit of a long shot. I'm happier with this interpretation at the moment. A, B, C to come lower. Okay, that's really all I've got for you from an Elliott wave point of view. Let's just have a quick look at some geometry here for a moment. So we've got our point of control down here. Now the market structure support with our fixed range volume profile here came straight in this divot. This is where we've had previous resistance and support becomes support again. But the actual point of control, given all of this prior market structure here that we're looking at, is the yellow dashed line here. So we could still come down in a 1, 2, 3, 4, 5 to the point of control, greatest area of market acceptance, and bounce from there. Now that would be a running flat in this case, that we've done A, B and C did not extend beyond where A completed, but B did extend beyond where A began back here. So that would be a likely place to find support if we do break down lower. Let's just have a look at our moving averages while we're here. We're currently below the 250-day exponential moving average here, with the 10 and the 20 below as well. 10's now crossing through the 250. 60 is trending down. Let's just come out to the weekly time frame for a moment and have a quick look at this. Okay, so the wick wasn't just to structural support. There's always something else hanging around, and we can see here that we came straight to the orange line here, which is operated as support here, 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 here. Right, we did not want to body a candle below the 60 exponential moving average. We wicked to it exactly here and we bounced. Okay, we have since bodied all candles above it. The 10 on the weekly has not yet crossed through the 20, but it looks like it might. So the 60 maybe could act as support again with a higher low, or maybe it'll break and the 250 down here near a 20k, which will obviously continue to creep up while we work our way down, could provide a base if we do break down lower, if this point of control doesn't hold. The one theme we can see here though is declining volume the whole time. This is, the declining volume from the peak of the 3. Depending on how you interpret this, this is either the top and then we work our way into the first leg of this correction, then the B, and now we're doing the C. Or there's an alternate count which we looked at a while ago, which is the ending diagonal, which also supports declining volume, a diagonal pattern going into a fifth. And then all of this structure here is declining volume because it's a B wave. So sooner or later, when we do pull in a low, we would like to see volume start to climb again in support of an impulsive move out of here. Okay. Right then, so we've spoken about the Elliott wave picture, we've spoken about the basic analysis here. Let's just bring up our momentum indicators for a moment, come back down to the day time frame. So we hit oversold conditions with this big wick down, then we got a slightly lower low here in the RSI, even though we had a higher low. We have no bullish divergence. We have a low and a higher low, low and a higher low repeated in the MACD and the RSI, so there's no bullish divergence to suggest that that would be the precursor of a major low. So you don't always get what you want in that case. It'd have to be a pretty almighty bullish move coming out of here to convince me, without that divergence in place, supported by volume, that we had already bottomed. I mentioned the structural support, I mentioned the golden zone retracement, but we've also got one other extension, I think I mentioned it, which is the length of the A projected from the top of the B. We're going to just take our wave 3 fib extension tool here. Is that right? Tom fib extension, there we go. Alright, now if we shift into log scale here, you can see that the wick came pretty much straight to the 61.8, which is the yellow line below our structural support, so pretty much came to the golden zone as well. So as I previously mentioned, that would be the first target for a running flat, and that would be extremely bullish if we bottomed here. You know, we've gone A, B, very small C, and now this is 1, 2, and off we go. So that would be extremely bullish. So we've spoken about the ABC flat, we've spoken about the potential for a 1, 2 into structural support. I'm going to favour the idea that we're going to continue to head down lower until I see evidence to the contrary, until I see us break this regression channel, and then move higher. But there is one other thing, an alternative I want to consider. This is our primary and this is what we're going to continue to support, but there is one alternative which is completely different. So let's just get rid of some of this noise and we'll consider that before we leave. So a triangle, a running triangle to be precise. I'm not sure how I feel about this, to be absolutely honest. If this is as early on as I think it is, we still have a fair bit of time to go, probably the end of Q1 this year, so a good 3 months more of price action I would have thought, given the way we've progressed so far. So we've got the A here using the same 3-wave structure. We then get a nice simple zigzag into the B, and then we get our ABC zigzag here into the C. Now this could be some kind of complex correction, maybe into the D, then another move back into an E, and then finally get out of here in a triangle 3, 4. Now I don't know if this is going to be, it's just literally just a random piece of conjecture at the moment because there isn't enough structure to really support this. We could have to come down lower to find the C, and it could be some kind of complex mess, WXYXZ or WXY, some kind of move like this down to the C, then a move up into the D, then a move down into the E. Right, so it's just a thought. I'm not really giving this any weight at the moment. It's just a spare piece of TA to consider in case the only reason I'm really thinking about it at all is if we do get some kind of move back up which doesn't make a new high, does invalidate our impulsive move, and then we reverse again and then come back to this support and break it. At that point I would start to consider a triangle to be more likely. I mean, by that time we'd be out into February, March anyway. So there you go, just leaving you with that as an alternate. But to sum up, bearish case is still the most likely, I think, in my opinion. I don't think we're done yet. I am open to changing my mind. If we come rip-roaring out of here and invalidate this level, then I will definitely consider the possibility of having already bottomed. But I do have an awfully difficult time trying to get an impulse off of this low on all time frames. So that's the best I can do in the meantime, guys. Alright then, we'll call it there, and hopefully I'll get another video out on altcoins as well. And then, like I said, we'll be back to our usual routine from Monday. So if you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. And as always, a huge thank you to my Patreon subscribers. Your support is greatly appreciated. If you're interested in becoming a patron, you can follow a link in the description box below. Head over to the Green Star Trading Patreon, have a read of the tiers, see if there's anything you're interested in, and also If you're not following me on Twitter yet, please do so, as I always post notifications of YouTube videos as I upload them, in case people don't receive their notifications from YouTube. Alright then guys, take care of yourselves, and I'll be back with you soon. All the best, bye bye.